AbbVie's a pharmaceutical stock that's been a leader in the healthcare industry since their spinoff from Abbott Laboratories in 2013. During this time, the company's been a very popular stock among dividend investors for a lot of really solid reasons. AbbVie is a dividend aristocrat, which means they've grown their dividends every year for at least 25 consecutive years when you include Abbott Laboratories in their dividend history. Historically speaking, AbbVie has almost always offered a higher dividend yield than the average dividend aristocrat, and they've also offered investors a pretty impressive amount of dividend growth over time. According to Seeking Alpha's metrics, AbbVie has crushed similar stocks in the same sector when it comes to dividend increases. Additionally, ABBV has done really well from a total return perspective, offering really consistent share price growth. Since their IPO in 2013, their stock has delivered investors an average annual return of over 19% per year. You can see that a $10,000 investment right when this company launched would now leave you with over $72,000 today after 11 years with reinvesting dividends. But some recent developments have resulted in shareholders becoming a little more skeptical of their future. AbbVie stock is currently down 11.5% in the last month, and news that came out on Friday resulted in their stock share price falling by 4.5%. I figured it'd be a good idea to look into the status of this stock, which is pretty popular among my subscribers, and it has some investors concerned about what the future holds for them. The cause of concern surrounding AbbVie has to do with the loss of their Humera exclusivity. Humera is an arthritis medication that's also this company's #1 selling product. And last year, AbbVie lost their patent protection here in the US for it. Exclusivity is a period of time where a brand new drug is protected from generic drug competition. According to the FDA, this rule is designed to promote a balance between new drug innovation and generic drug competition. The length of exclusivity can vary, but AbbVie lost theirs for Humera at the end of 2023, and so far for this year, we've been waiting to see the financial effects of that fallout. According to AbbVie's 10K, which was released in February, you can see Humera made up the majority of their net revenues in 2023, not just in immunology products, but across everything else this company sells, including oncology medications and Botox. Their second most popular prescription, Skyrizi, only made up a little over half of what Humera made last year. Now that the company doesn't hold the exclusive rights to this treatment, this means that competing companies can essentially make their own Humera alternatives. Whenever this happens, it drives down the price of the treatment, which is great for consumers, but bad for revenue for the company that first introduced it. Last week, it was announced that another company was introducing an alternative to Humera, which is Cigna. Last Thursday, Cigna's Evernorth unit announced they'd be offering a biosimilar of Humera through its Accredo Specialty Pharmacy program beginning in June that'll have zero out-of-pocket costs for most patients. Whenever there's some kind of serious news surrounding a company, it's usually worth listening to a company's earnings call. That way you can hear directly from the CEO and the board of directors regarding a particular situation if it's mentioned. Fortunately, in their earnings call from April 26, the board had a lot to say about the loss of their Humera exclusivity. On the call, CEO Rick Gonzalez made the following comments, quote, "Our business is performing very well and is in a strong position for the long term. We are successfully navigating the Humera US loss of exclusivity. We have built an outstanding company culture, an important priority and competitive advantage. Our productive R&D engine, which has yielded numerous innovative new medicines for patients, will continue to fuel our robust pipeline for years to come." But despite the positivity, it was also announced by CCO Jeff Stewart that Humera had global sales of approximately $2.3 billion, which is down 35.2% on an operational basis due to biosimilar competition. However, they also said that erosion in the US played out slightly better than their expectations in the previous quarter. In order to stay competitive, AbbVie had to reduce the price of Humera to try to keep its clientele. So with this in mind, now that the company's #1 product is eroding, there's only a couple options that exist going forward for them. AbbVie's going to need to develop new products as well as grow their existing line of pharmaceuticals and clients. They're also going to need to try to hold on to as many Humera users as possible, but this will only last for so long as identical, cheaper treatments get introduced. So let's examine how well this company is doing today now that they won't be able to rely on Humera too much going forward. Let's take a look at AbbVie's most recent earnings that came out. By pretty much all accounts, these earnings were very impressive for the company. AbbVie reported EPS of $2.31, which was 2.1% better than expectations. They also reported revenue of $12.31 billion, which also beat expectations by $370 million. AbbVie stated that they saw a 9% increase in revenue from their company's oncology portfolio and a 15.9% increase in revenue from their neuroscience portfolio. So with numbers like these, it doesn't seem to make logical sense for their share price to fall following these metrics. But it just shows that it's not the actual financial results that causes a stock's share price to fall, it's how optimistic the market is about a company's future. Taking a look at the state of their dividend, Seeking Alpha is reporting that they have a dividend payout ratio of 55.29%. This is slightly higher than what probably the majority of people would consider to be comfortable for a company like this. I know I normally cover a lot of REITs and BDCs on this channel, and both of these companies have very high payout ratios. But since AbbVie isn't one of these alternative investments, we want this number to be much lower than a REIT. For comparison, Abbott Laboratories currently has a payout ratio of 48.29%, and Johnson & Johnson has a 45.51% payout ratio. So AbbVie's dividend isn't in danger based off this metric, but I'd consider it to be slightly outside of the comfortable zone. This company announced a dividend of $1.55 back in February, and this is in line with their previous dividend. AbbVie last grew their dividend in October, which is when they normally announce dividend increases. So a potential increase most likely won't happen until then. In the last 5 years, they have been slowing down slightly with their dividend increases. Back in 2018, they increased their dividend by 15 cents per share, followed by an increase of 12 cents, then 11, and then for the past few years, they've been pretty steady with 7-cent increases per year. Another important thing to look at with these pharmaceutical companies is going to be their product pipelines. The key to this company thriving is going to be not only increasing the number of customers using their current products, but also developing new treatments. As of last reporting, AbbVie currently has over $7.8 billion in research and development according to their website, and they currently produce treatments for over 75 different conditions. Their latest investor presentations is where we want to look to see what their pipeline's been up to. The two products this company appears to be the most optimistic about are Skyrizi and Rinvoq. Rinvoq is a treatment that's used for a wide range of conditions, including mainly arthritis, but also eczema and Crohn's disease. For both medications, if things keep going the way they have, then they expect to see their sales of Rinvoq nearly double by 2027, and Skyrizi will grow to over $17 billion in global sales. This would definitely help make up for the lost sales resulting from Humera's lost patent. They also have a huge list of other treatments at different phases. Some of these don't even have names yet, and even though they're on the pipeline, it doesn't guarantee that these will ultimately be products. Some treatments could fall through or not get FDA approval. But there's a huge list of different treatments here, ranging from bipolar disorder to treating tumors to spinal cord injuries and HIV. Looking forward to this year and next, you'll see that some alternatives to pre-existing treatments are currently either awaiting approval or are getting ready for regulatory submission, or they're still in the early stages. So fortunately, they got a lot of stuff going on here, but again, there's no guarantee that these will all be successful products. You can see that some of these are still in the process of getting international approval as well, which will help increase sales. But in the end, with all things considered, I don't see any reason to be concerned about AbbVie or the safety of their dividend. Although they did not discuss the dividend in their latest earnings call, it doesn't appear to be in any kind of trouble. Pharmaceutical companies in general are riskier investments than other types of companies. Based on what I'm seeing though, even with Rinvoq and Skyrizi still expected to see growth, I'm not convinced that they'll match Humera in terms of revenue for AbbVie. They're gonna have to continue to make new treatments and expand their product line even further. They definitely have the resources that most of their peers don't have, which also gives them a competitive advantage. But again, I just don't see anything indicating that this company or their dividend is in trouble. We'll have to keep an eye on their current products to see if they will continue to grow in popularity or if this company can introduce a new home run product. But with that being said, that's going to conclude today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.